In this video, we'll be covering the new EBITDA feature and how to utilize it effectively. I'll guide you through the setup process and explain the significance of using EBITDA for business analysis. Let's get started. First, let's discuss what EBITDA is and why it's important. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a widely used financial metric because it focuses on a company's core operating performance by excluding the impact of financing, tax environments, and non-cash accounting items. This makes it a valuable tool for evaluating a company's ability to generate profit from its operations alone, offering a clearer perspective on operational efficiency. To configure EBITDA in our system, start by navigating to the company settings, which can be accessed either from the workspace home or directly within your company. Once inside the settings, you'll notice a new EBIT and EBITDA tab, where you will find options for selecting the accounts relevant to your EBITDA calculation. These accounts include taxes, interest expense, interest income, depreciation, and amortization. You can select the accounts that align with your reporting needs. For example, by selecting the appropriate account, you can include taxes paid as part of the calculation. In terms of calculation, EBITDA is derived by adding back depreciation and amortization to operating income, and by excluding interest and taxes. This allows you to assess profitability from operations alone, without the influence of financing costs or tax obligations. An important part of this process is understanding net interest expense, which is the difference between interest expense and interest income. This is a key component in determining your overall interest burden or benefit. Once you've completed the setup, you can access EBITDA data through your reports and dashboards. Although there isn't a specific EBITDA tag in the system, you can easily search for it in the dashboard library. You'll find that some of the updated dashboards and reports now include EBITDA metrics. You can also hover over the dashboard descriptions to see the included metrics. When generating reports, you can also use the data picker under Ratios and Metrics to select EBIT, EBITDA, EBIT margin, and EBITDA margin from the Ratios and Metrics section. These options are directly linked to the company's settings you configured, and they can be incorporated into your reports and dashboards as needed. For those using consolidated financials, note that EBITDA is not configured at the consolidation level. Instead, it must be set up for each individual company, and the values will then flow through into the consolidated reports. Additionally, the EBITDA feature integrates smoothly with budget tools such as Budget Pro, Excel Budgets, QBO, and Xero. By setting up EBITDA as an account, the system will ensure that your budgets include the correct calculated values for EBITDA, helping you better align your financial planning with actual performance. If you have any questions about this feature, send us a chat.